From rental income to portfolio diversification, there are several advantages to investing in real estate. Some investors turn to hard assets such as real estate during market volatility, such as the stock or bond markets. It has been increasingly fashionable to invest in second homes to rent out for short periods on house sharing services in recent years. In this video, we discuss how much money you have to invest in real estate. Hello viewers, and welcome back to our channel. If you are new here, before watching this video, you have to like and comment below to watch great video clips to enhance your knowledge. As a real estate investor, you have several options for getting started without spending a lot of money up front. This means that they are looking to diversify their portfolios by moving away from traditional investments such as equities and bonds, driven mainly by fluctuations of public markets. Because real estate is a tangible asset, its future value is determined more by localized supply and demand, physical improvements to the property, and the changing demographics of the metro area. Residential real estate investing. Residential real estate is what most people think of when they hear the word real estate. In the end, most of us have first-hand knowledge of the residential real estate market. Investing in residential real estate requires a certain amount of capital. It turns out that, according to HousingWire, the median down payment for a property in the United States is a little over $15,000. Rental properties are a good investment for those who can afford the initial down payment. Many people are aware of the concept of flipping houses, which involves buying, refurbishing, and selling residential properties quickly. Real estate investing, however, involves a lot more than simply purchasing and selling houses. Moreover, being a landlord entails its own set of responsibilities and problems. Residential real estate investing may not be the best option for every investor due to the time, energy, and complexity involved. Limitations of residential real estate. Number 1. You own all of it. Your down payment of $15,000 is only for the first mortgage payment. There are still several years before your rental property pays for itself. Any closing fees involved with the transaction, annual property taxes, maintenance and repair changes, and more are all your responsibility. Because you are the single owner, you are legally liable for all aspects of the property. Houses require a lot of work. This is especially true if you're interested in flipping fixer-uppers. Depending on the extent of the repairs or remodel, you may have to do them yourself or hire a crew to do them. A landlord or a property manager will ensure the property is in good condition. Any concerns, broken appliances, frozen pipes, a leaking roof, are fixed quickly, and that rent is paid on time. Number 3. It's feast or famine. If your rental property doesn't have a tenant, then it's vacant. Only when you've completed the significant remodeling improvements and found a renter will your rental money begin to flow. Your property isn't making you money every month. It's vacant, which means you're not earning cash. The alternative: commercial real estate. Property investing doesn't always imply owning a home. Individually owned properties make up a modest part of the overall investment market. The commercial real estate market has proven to be a popular choice for individual investors who want to turn real estate into a passive income source. What is commercial real estate? All buildings other than single-family residences and duplexes are classified as commercial real estate. There are several different sorts of commercial investment properties that fall under this category: office buildings, retail stores, shopping malls, factories, medical offices, self-storage facilities, hotels, apartments, condominiums, senior housing, and more. At a glance, residential versus commercial real estate. Investments in commercial real estate are typical: hands-off and not overly involved, reliable and predictable, as opposed to residential real estate investments. The money you save by not making a mortgage payment is invested in a property of your choice. New construction or development of an existing building may be involved in the purchase of property. New construction or redevelopment of an existing building may be involved in the purchase of the property. An individual or company called the sponsor is in charge of overseeing the project from start to completion and the day-to-day operations of the building. Essentially, you become a passive investor in the project, which means that you're not responsible for any project management itself. Amount of money needed for commercial real estate investing. Property investment is more affordable than most people realize. Crowdfunding platforms allow you to contribute to the project along with dozens or hundreds of other investors. You can invest as little as $25,000 in commercial real estate on CrowdStreet. Different options for different investors. As a CrowdStreet user, you'll have access to direct investments. You'll choose the project to wish to invest in, and your money goes straight to the sponsor. The blended portfolio from CrowdStreet is a diversified fund comprised of numerous properties, picked algorithmically to minimize risk. Lastly, investors who prefer to remain hands-off may choose to hire financial advisors who provide guidance and, at times, make investment decisions on behalf of their customers. Thank you for your feedback, and please remember to subscribe to my following videos.